Welcome back to Yahoo Finance Live. Betting against Meta, the newly launched ETF Punk has made it a point not to include any holdings of Meta in its Metaverse-focused fund and even has a permanent position shorting the stock. But investor reaction shows the street might have some questions about whether the strategy will succeed. Here to discuss his fund is Michael Auerbach, founder and CIO of Subversive Capital. Michael, good to see you here this morning. So Meta is the company building out the Metaverse. So why bet against that?
Yeah, because we actually believe that Meta isn't the company that's building out the metaverse. They've announced that they're the company that has changed their name to Meta and are creating their own metaverse for their customers, which have been fleeing the platform month over month. We even saw a decrease of users in Europe, slight increase of users in the US, but revenue generated per user has gone down in both Europe and the US, and we're going to continue that decline. When we launched our Metaverse ETF, we were looking at other Metaverse instruments out there, Metaverse ETFs out there. We're the only actively managed Metaverse ETF. And we're including companies that are building the infrastructure and the applications for an interoperable Metaverse, which consumers want. And consumers today do not want Meta or Facebook or Mark Zuckerberg, for that matter, to be the custodian of their digital futures.
If Meta is not building out the metaverse, then what are they building? Because they just reported a couple weeks ago, they're spending billions of dollars to build something.
Yeah. So, I think he put it out in his video. They definitely have this, conference call, where you put on the goggles and you can join your friends or colleagues in a conference and have whiteboards. And we don't really think that's what consumers are looking for. They are certainly looking for more immersive experiences, but there's a real concern about whether or not the Facebook platform is where people want the future of their lives to be in this more immersive, whether it's through VR or AR, more immersive digital experiences are going to happen. My son spends a lot of time on Roblox. Roblox is a true metaverse platform. There are other gaming companies out there that are building their own metaverses. Eventually, what my son builds in these certain gaming platforms, he'll be able to port over to new gaming platforms. We're investors in companies that are in the fitness space, in the telemedicine space, using more immersive experiences to have better consumer experiences in the end. We've taken a bet against Meta, not just from an economic perspective, and the stock's down, I think, 38% or 32 to 38% since we went live with our ETF. But we're looking at companies that are truly building the infrastructure and the applications, and we're not looking to invest in companies that we believe are sort of going to become irrelevant for our digital futures. But also, Facebook has done things that have undermined our democracy, have implanted misinformation among our populations, have made our national security less safe with things like January 6th and the influence of those protesters online, have affected our teenage girls, the increase of suicidality with Instagram, et cetera. And we don't see that platform as how we want to spend, our digital future and how we want our children to spend their time online.
Michael, with all due respect, those criticisms of Facebook as a company have been out there. And I would argue the decline we've seen in the shares has very little to do with those sort of very real ethical concerns about the company. Do you view potential investors in your ETF as being attracted to it by this ethical argument that you're making? Because Facebook and Meta doesn't seem to be going anywhere, certainly even its core business, and even if it's not doing as well as it was, despite a lot of these concerns.
Yeah, I think that the facts are in the numbers, right? So we are seeing users leave the platform. We are seeing that the most successful users on the platform, given their new algorithm that changed a couple of years ago, are the ones that are promoting negativity. Consumers are, I use Facebook to remember birthdays and to see pictures of my niece and nephew. I do not use Facebook as sort of my, social media go-to. And more people, particularly our youth, if you talk to folks in their 20s, they're not using Facebook to communicate. They're not using Facebook as the platform of choice. And so Q over Q, we're going to start to see sclerotic growth or, users leaving the platform. And we're going to continue to see that decline.
So as I look at your ETF and its holdings, Michael, it really is like the breadth of the rest of the metaverse, it seems to me. I mean, you've got the chip makers in there, you've got companies like Roblox in there, you've got media companies in there like Disney. So how should people be thinking about it then, ex Facebook? Is it, I mean, it seems like it's not quite kitchen sink, but there's a lot of stuff in there.
Yeah, so we really wanted to create an actively managed ETF that was really tracking what companies were doing in real time vis-a-vis Web3 or the future of digital. And if you look at company strategies, you've got the infrastructure companies, you've got companies like Microsoft and Google and Apple, which are all building out what their AR, VR, immersive strategies are going to be. And then you've got companies like Peloton, which I know has suffered for all sorts of other reasons, but they've got sort of a cult-like following and a screen, and eventually they've just launched a partnership with an AR glass manufacturer, which is also in our ETF. Whereby, the future of exercise, the future of medicine are all going to be more immersive in the metaverse. And we've also got some, we've got some digital assets in there as well, like, Coinbase and Galaxy, where we feel like, the blockchain and ability to transact or to move items, if you're thinking about gaming, to be able to move items from one gaming platform to another gaming platform. We're sort of actively engaged with these companies, tracking what they're doing. And for our investors, we're providing a basket of names that we believe will sort of encapsulate what the metaverse is going to be within the next couple of years. I mean, we have a part of it now, but we're in the beginning stages here. And it'll be exciting to see what they come up with over the next couple of years.
Michael, it'll be interesting to keep in touch with you, see how the ETF progresses as we see progress made in the metaverse. Thanks so much for being here. Michael Auerbach is Subversive Capital founder and CIO. Appreciate it.